Hi guys, how are you? Welcome um, to the lunchtime uh, overview. Let's see what's going on here. Market is crashing, and we're going to start with the S&P equal weighted ETF. Clearly, it looked really funky, right? When you uh, when you look at it, right, it looked really megaphone-ish, funky, right up against resistance. That's failing. Dividend weighted S&P, same, right up against resistance. Broke yesterday, continues to drop today. VIX, we had that rounding bottom. Okay, it kept hitting up against that resistance area. We first identified it when it broke this trend line. Okay, the trend started to pause, and then we got that rounding bottom, and voila, right? Now we're breaking the previous high. And the question now is going to be, is this going to bounce? Is it not going to bounce? Is it, uh, you know, we're going to see. I'm looking at the charts the first time, like you. So I will tell you in a moment. Okay, New York Stock Exchange continuing to fall down. Dow Jones Industrial Average, same thing. This has been the leader to the downside. Okay, so when you take out everything, we've been talking about this M pattern exhaustively for a long time. Okay, and you can see it. Now it is complete. This is an M pattern. All right, very clearly. And then this is what I was saying before, that the market has to be ready to go down. This this was not ready to go down in a straight shot. All right, and that was the problem for this. If it would have perhaps bounced a little harder or something, it probably would have held, right? From a technical perspective. But what happened is they came in with stimulus. They just stimulated the shit out of it, and the market went straight up. So now we're getting that M pattern. Stimulus has ended, right? Not ended. Believe me, they're going to come out with a lot more. But the stimulus has ended, and now you're seeing what? That the market took its time, it went sideways, and now it's about to puke it all up. And that's why, again, is it going to bounce from here or not? And that's going to be the question. All right, S&P 500, straight down shot, limp tick. All right, incredibly bearish. Over here is the 63-day moving average, where the arrow is, the black arrow. Completely failed. Not looking back. NASDAQ right up against the support area of this channel. And this is what we were talking about yesterday, all right? That it was an expansion of the structure. Once we did this fuckery move, you expand it. And sure enough, we came up to the resistance area and failed miserably. I told subscribers yesterday that the move today is going to be bearish. Uh, Small caps completely collapsed, all right? You see how far away most of these are from their support area? Right? They're quite far. The only one that's at a support area, quote unquote, is the Nasdaq, and I'm not sure that's going to hold. Just looking at it up till now, I don't think that's going to hold. I don't think that's a buy point. Let's take a look at the fangs. Okay, back, but they're still going sideways. When this breaks, when this flag breaks, Nasdaq is done. Okay, so I'm not in the buying camp. Transportations, we talked about it yesterday. They were leading down. They were down 3%, and Nasdaq was up half of a percent, 0.7%. And again, transportations are also leading to the downside. World Stock Market Index. Okay, we identified the double top, went into this bullish looking structure, but you know, incredibly bearish. Airlines, straight down. All right, this is interesting. My little indicator of shitty stocks, and this is how I see the economy behaving. Okay, and you can see that again, breaking all support, doesn't give a shit. Everybody's selling everything. All right, they're just selling it. The China is holding up for now, but I don't see that, holding for too long. That it's going to fall less than everything else, of course. They took care of the virus. They're doing okay. Emerging markets, back below the structure here. And again, the bounce was not very hard, right? It kind of went back into structure and just held. All right, so that's bearish. EEM, same thing, emerging markets breaking down. Japan, we said, look, this has to decide one way or another. And it's deciding. One second, please. My throat keeps sticking. Australia, straight down. Nifty 50 still holding up in that flag, but for how long, right? Cosby holding up, that's okay. They took care of the problem as well. Europe, oof. Europe, Germany said it's going to do a partial lockdown. Restaurant bars, November 2nd. So that makes sense. Look at Germany. Unbelievable, huh? Straight down shot. Again, for those people with that, buy the dip, the 401k, you just want to buy and hold over the long term. See, you never know what the market is going to do. All those people, they're idiots. Sure, you want to buy the market and add to it. That's the best way to do it, right? There's no question about it. But when you're faced with an economy that is collapsing globally, and you know it, you see it, why would you be fully invested? And why would you just keep adding? You got, let's say, $100,000. You're putting 500 a month. You think that 500 a month is going to make up for dollar cost averaging down? The fuck? No, you got to reduce your risk. You got to reduce your risk, okay, during these times. You're looking at this move up, and oh, yeah, everything looks beautiful. Yeah. Is it beautiful? Well, okay, where are we right now in terms of price? And if you go all the way back here, all the way back, you are back at March 20th. March 20th. Okay? Think about that. You want to reduce risk. And if you want to buy the dip, well, you got to sell first. You got to sell first. Can't buy it if you're already invested. You just go right down with it. UK. Breaking below. This is huge. You see, I don't see. Sure, the market is going to bounce at some point, a little bit, right? There's going to be some kind of bounce. But when everything is breaking down, why would you be looking for a buy? Right? That makes you the wrong kind of contrarian, where you'll just do whatever the market is doing, just do fucking the opposite. It's down 3%, too much, going down. Right? There are times where you want to buy that 3% drop, and there are times you don't. And that's why we do this analysis overall. Okay? The message of the market is what you listen to. Don't come up with cute stories. Don't guess. Don't, you know, come up with crazy shit in your head and be like, yeah, well, that makes sense. Okay, I'm buying. No, no. Taiwan was holding, started to fail. Remember, Taiwan, Korea, China, Asia in general, uh, they are they're doing far better than the West. Okay, they understand what masks are. They don't run around saying it's the flu. Okay, they took care of the problem to the best of their abilities. So, of course, they're going to behave much, much differently. Brazil, right? Right up against the resistance. We said yesterday that this is going to break. Look what happened. You wake up this morning, everything collapsed. Okay? Saudi. We said it has this tendency of breaking out, making it look like it's incredibly bullish, and then just collapses. All right? This is exactly what happened. Exactly. We're at the neckline of the head and shoulders. Stand by 1 second, please. I just realized my screen is black. Shit. All right. Here we go. Damn it. Gotta start over again. That sucks. All right. So let's start again. Anyway, equal weighted S&P collapsed. Dividend weighted ATF collapsed, right, from this resistance. VIX, right, rounding bottom. We had this arrow in place last couple of videos, from last week actually, right? Boom, broke out. New York Stock Exchange collapse. We had that little baby wedgie looking thing, and look this morning what happened, right? Dow Jones leading the markets down, testing previous low. I didn't put the marker here. Okay. S&P 500 within the channel, boom, straight down. Incredibly bearish. And this is the 63-day moving average, and we're below it. So that means over the course of 3 months, people are uh, net sellers of stocks. NASDAQ, at the previous low, is this going to hold, right? I did some of the analysis already, so I can tell you likely no. You'll get some kind of a bounce. You'll get something like this, probably. Okay, I will not be a buyer, but something like this maybe, where it would just kind of hold and then go to uh, the next move down. Okay, everything else is breaking. The only one that's at support is um, the Nasdaq. That's it. Everything else is obliterated. Small caps. You see how far it is, right? See how far it is? Still has a way to go. Google, Google, Fangs. Oh, come on. Okay, look at it. Right, sideways. This is going to break. Okay, this is going to break. It's going to end up looking like this, like that. All right. Look at the structure up here, megaphone-ish, right? Remember I was bitching about it. I'm like, this looks funky. All right. So what do we have now? Clearly an M pattern, right? Because this is going to break. Ooh, look, that's going to break. So that's a topping pattern. You want to buy? You want to buy the dip? Yeah. Good luck with that. Transportations again, leader on the way down. Okay, leader on the way down. Taking a look at the world stock market index. Okay, incredibly bearish. Again, far away from any kind of support. Far away. Far away. You don't want to be touching that shit. Airlines. Still holding up some hope. I don't know. I'm surprised they're as high as they are, but that's going to break. This is my little indicator. Okay, it's Hilton, Diana Shipping, Dry Cargo, Avis, Delta, Royal Caribbean, and Tacos Energy, which is oil tankers. and it's an index, and believe me, nobody's looking at this index. So whatever you're seeing on the chart is, is legit. Okay, so you had your thrust down move, you got your wave two up, you went sideways for a bit, and now you're breaking back down. So what does that tell us about the market? That it's in wave three down, right? That it's going lower. China holding up here, barely. Uh, Emerging markets starting to break down from the rising F flag. Emerging markets the same. Japan, right, coming back down. It's got a long way to go down here. Okay. Australia had a little flag, tried to push higher up against resistance, failed miserably. Nifty 50. Okay. Holding up for now, but I don't think that's going to be the case. Cosby, all right, this is the Asia stuff I was telling you about. They're going sideways, they're doing well. Europe, look at that. You wake up this morning and you just obliterated. Obliterated. Okay. Germany. Right. Boom. See ya. And this is what I mean. The market has to be ready to go down. Okay. It has to be ready to go down. Oops. Where is it? Okay. Straight shot down. Straight shot up. Okay. And now it's ready to go down. Now it's ready to go down. And again, your price is an advertising mechanism. Okay, it's going to go all over the place, and you're going to think that's value. And every day you wake up for the last whatever it's been 6 months, it's been going up. Oh yeah, look, the market is going up. Yeah, we're going back to normal. Yeah, oh yeah, everything is it's a recovery. Recovery my ass. Oh, liquidity is not the problem. Look, look at the chart. It's bouncing. Everything is wonderful. Not realizing the corona is not just some volcano that's just gonna erupt and then we'll go back to normal after it's done. UK, done, done, right? This is bear market stuff. Markets do not behave like this in a bull market. Markets, bull markets don't behave like this in a bull market, right? You see it, right? This is supposed to lead to the upside. Instead, we got this. That's what we're getting right now. Okay, why? Because we're in a bear market. Sure, the prices went up artificially, thanks to endless trillions from Trump and the Fed and every other central bank. But now reality is hitting. Taiwan back into the structure, which is megaphonish. So now, if you expand the range, look at that. Okay. Again, they're going to do better. The East is going to do better than the West. Stand by. 1 second. Brazil, right? We identified that this broke a couple of days ago. Look at it now. Boom, straight down. Saudi. This is the part I was telling you before when it was a black screen, right? You get these moves where it goes above the structure and then just fails. I don't know why that happens in the Middle East, but it's very common. Oil down to 37, okay? Uh, right at support. If this goes, and I think it will, because if the economy is going to start to shut down again, why would you want oil, right? And believe me, the big oil companies, they're hedging oil, and that's why you've seen it go so tight sideways. Uh, if it starts going back down again, they're going to lose control of uh, of the trade. So, all right. So Bitcoin. this is going to be interesting because you broke out incredibly bullish, right? Everything was going great and then tanked along with the rest of the market. So what are we seeing? That even cryptos are selling off and commodities are selling off, markets are selling off, everything. They're just selling everything. Why would you want to buy when the market is telling you that fuck it, I'm selling everything? What's what's the desire, right? What's the desire for that? Just doing the opposite and thinking that you're smarter than everybody else. No, 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 no. Don't do that. Let the message of the market tell you what's going on. Ethereum back down, Litecoin down, Ripple down, gold broke. See, I had my concerns about this one um, because you had this bearish structure, and then you went a structure below a structure, and of course it broke. That's what it's supposed to do. We're still above. We're still above this structure, this wedgie looking formation. Um, but again, this should be a fear indicator at this point, right? And it's not behaving as a fear indicator. Uh, so, got my suspicions on that one. Skip this. Real estate. Look at that. Boom. To the penny. To the penny. Right? Look at that. To the penny. So this one looks like it's going to start going down as well. All right. So you end up in a situation where you're going to have another M pattern, right? And then this is going to fail as well. Everybody today is trying to message me. Everybody. Where were they a couple days ago? Um, Commodities rolling over. Okay. They were looking really good that they were going to push out. That's not the case right now, is it? It's down 2.2%. Palladium breaking. All right. Palladium was leading on the way up, and now it's breaking. They're selling everything, my friends, guys and gals. Copper, right? Right up against the resistance area, starting to fade away now. Base metals pulling back. Agriculture, it's still holding, but let's see for how long, right? Let's see for how long that's going to last. We were looking for this inverse head and shoulders and pushing up higher, and then you wake up this morning and everything's collapsed. So we're going to take that out, and the likelihood is once this breaks, we're going right back down, right back towards the lows. So I'm not bullish on commodities right now. Precious metals came up, failed. I shouldn't have done that. All right. Commodities back into structure. Overall, DBC. It's an ETF. Sugarcane, okay, starting to come back down. Now that it came back into structure, what happens now? Well, that's a bearish structure now, isn't it? That's a bearish structure. Next move, down. Corn. Why isn't this? There's corn. All right, tight, tight, tight. Now this is starting to look bearish. Listening to the message of the market. And I'm marking these so when we do the next live video, you can see how the analysis progresses, right? So it's a tight, tight, tight. Right? Tight, 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 tight. Boom. Straight down. Hasn't happened yet, but believe me, it's going to happen soon. Wheat. Same thing. Up against the resistance area. Right up here. Failed. Back down. Still has some ways to go to the downside. Steel. Up against resistance. Can you guess what's going to happen next now? Right? Look at the message of the market. All right. Soybeans Up against resistance. Can you guess what's going to happen next? Nat gas, skip that. Dollar. Dollar pumped up. Try to push through this resistance area. Okay, it's a confluence of resistance and support at the same time. The fact that it's sitting down here for now, building pressure, it's going to either result to the downside or back up. Again, my bias is to the downside, but if the rest of the world is going to do worse than the US, then it's going to pop, clearly. Special drawing rights of the IMF, SDR. Still bullish. Let me get rid of this. Still bullish looking. Oh, come on. I hate when it does that. All right, still bullish looking. Dollar against the yuan. Dollar is failing. Of course, right? Of course. Asia is doing much better than the US. You want to own the yen versus the dollar. And, we had to, let me fix this real quick. All right, so we had this bear flag we identified a couple of days ago. Okay, up, next move down. Simple. Euro USD, back down. Let's see how, if this is going to hold. If the dollar starts going back up, this is going to fail, and then we end up below this trend line, and guess what happens? Well, yeah, we go much lower. But again, when you have Europe locking down, you want to own the currency. It's safer, correct? Pound, I'm still looking for it on upside. Yeah, it did break the trend line, but breaking of the trend line is not enough. It's got to hold below it. And then you can say, okay, dollar's going up, pound down, euro down, whatever. Okay. US dollar Turkish lira is just getting fucking obliterated. At some point here, it's going to top out. Not sure where, but when it starts doing this vertical shit, when it starts going vertical, the next move is down. And this one now is starting to go vertical. It's gonna still keep going up, but at some point it's going to start to fail. Dollar doing better than the ruble. Okay. It broke down, came back into structure. Clearly, this is a stop out, right? Once it comes back into structure. So we get rid of this now. All right, so you look for the next move up. USD CAD, the dollar is doing better than the CAD. Bouncing, but from a very low point. Australian dollar, failing. New Zealand dollar, falling down. And the dollar is strengthening against the yuan. 10-year, remember how I said tight, 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 boom, down? Right? Tight, 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 boom, down. There you go. The fact that it's still holding at 0.77 is a mystery to me with such a sell-off. All right. I don't know why that is. I'm not sure what it's doing. Because it should be pushing down, right? And it's not. So clearly something has changed. Something has changed because the message of the market is markets are going lower. So we'll see. 10-year bond, 30-year bond, okay, selling off as well. Interesting. Aggregate bonds, we're looking for the next move up. Remember, when bond prices rise, interest rates fall. And it hasn't broken out yet. So it kind of makes sense why the 10-year has not collapsed, right? Now, eventually, the belief, at least my belief, is that we're going to end up in negative interest rates. When, I don't know. But, this is making the case for negative interest rates. Because the next move should be to the upside. Treasuries, nothing there. Investment grade bonds, again. And I'm spending a little bit more time on the bonds because I want to know why they're behaving the way they are. Okay. This is still a bullish pattern. Okay. This is a bullish pattern that should resolve to the upside. And again, when bond prices rise, interest rates fall. Junk bonds falling below. That's interesting. Okay, it's falling below because these are bought by the government, right? By the Fed. So, why are they falling? Uh, Emerging market currency fund. Get rid of this. And it's going sideways. Okay. Uh, Oil is getting fucking obliterated. Forget about oil companies. XLF back down. Banking. All right. So we had identified this uptrend. It corrected through time and then failed within this wedgie looking pattern. KBE, which is more of a pure banking ETF, failed. Tried to break out, failed miserably. Biotech, failing. Okay. Even the water ETF is failing. Okay. It's one of the best ETFs you can own, especially during these times, right? It's like a commodity, but they don't give a shit. Everything is being sold right now. Jets, down, right? We had identified this structure below structure, and failed. Points up, does the opposite. I'm telling you, bare knuckle charting, it speaks for itself. I don't even have to advertise it. If you guys can't see how um, how well it performs, I don't know what to tell you. Hotels back down. All right, hotels are still outperforming airlines. All right, let's take a closer look at the fangs. Facebook is down 4% within this megaphone. Again, the structure is pointing to further downside. Amazon holding, right? They're waiting for their earnings, but my guess, gun to my head, my guess, it's going lower. Apple continues to grind lower. There's a little expansion of the structure, it doesn't matter, continues to go lower, down 3%. And Amazon is down 3%. Netflix, right? Flagging out here. That's not good, right? When it flags at the bottom of the structure, that's weakness. Nvidia, my favorite, also failing. One second, please. Tesla. Ooh, Tesla. Garbage. Head and shoulders now starting to form. There it is. All right. What do you think the next move is going to be? Down. Okay. Down. All right. Delta's down 3%. American Airlines, Southwest Alaska is down 4%. JetBlue down 4%. Spirit 4%. Allegiant 5.6%. Copa Airlines down 5%. EasyJet 2.6. China Eastern Airlines. This is interesting. Down 5%. Let's take a look at that. Yep. Not doing a very good job breaking out, huh? But it's still a structure above a structure, so just keep an eye on this. We'll keep an eye on this. All right. So, not looking good. All right. My bias, reading the message of the market and looking at it all, do not buy Nasdaq. Okay. This is not buyable. It's going to bounce. We'll see how it bounces, but again, my bias is that it'll do something like this and then just fail. Okay. Let's take a look at the market internals. All right. So what's the best performing stock? ETF? or industry, whatever. It's utility. Financials, industrials. You kidding me? Right? You think there's going to be a bull market with these guys leading? And we've been saying that for how long now? 2 weeks? That the market internals do not look good? What's lagging? Technology, communication, healthcare. All right? It's the same theme. It's the same theme. Past 5 days. What's leading? Utilities, consumer discretionary, which is Amazon, really, just so you know, and healthcare. What's lagging? Technology, industrials, and materials. And I've had some concerns with materials because it was not performing as it should. It was for about a week or so, and then it started to lag. So now you're seeing that commodities are starting to sell off, right? And they're selling everything. So, uh, so that's not good. That's not good at all. All right. All right. So I can take your questions now that I understand what's going on. And let me just pop this out. Anybody have any questions? No, no. WTI is not experiencing rounding top. Let me, where is it? Where's oil? Oh, come on. Yeah, it's a flat. That's all it is. And if you look at it, right, where's price spending its time? Right? At the bottom of the structure. So no, it's not a top. Maybe you're talking about this here. I don't know. But forget about inverse CTFs. Stay away from them. Those things are, though, they're deadly, those things. You know, they don't perform as they should. Yeah, it looks great, if you do it intraday or something. Uh, but stay away from those things. Let me show you this. How's that performing, huh? Not bad, right? Wait till it gets down here. I'll be showing you this every day. Telling you how smart I am, and look at this, and I'm the man, and quit your day job. You can own a Gulfstream 650 like me. Just kidding. And give your boss the finger. I will make you rich. All right. TSA numbers. What's going on? Uh, Not bad. Not bad. Okay. What's Twitter doing? Car sales were up today. Okay. Again, this is pent up demand. This, when you're seeing something that's going to drop off, right, straight down, what do you think is going to happen next? Well, you're going to have that pent up demand. It's going to come back in. And they're like, no, no, look, it's recovering. It's recovering. Recovering from where? Down here? Where is it recovering from? No, no, it's recovering. We're going back to normal. My friend, please, please don't say stupid shit. Mortgage applications, okay, whatever. Look at the positivity rate, almost 7.5%. Right, and I've talked about this. I don't know, October 10th, I think. I said, oh, here comes wave three. Now look at the testing started to fall off, right? So when you have less tests, you're going to find more positivity rate rise. This time it's different, right? Because positivity rate was really high when we weren't testing a lot, right? And then as we started to increase our testing to normal levels, it started to flatten out, and then it started to rise in the summer when we had that spike, okay, from to the south, and now we're testing more than ever, and positivity rate is rising. So that's not a good thing. Okay, granted, yesterday we had a small testing day, but still, the trend is to the upside. And that's the problem. You're getting positivity rates of 7.5 with the most amount of testing ever. Okay, so that's a problem. That's a problem. I saw somebody run around and be like, "Oh, look, masks don't work." Yeah, well, if people don't wear them, I mean, not if people, if some people are not wearing them, of course you're going to have positivity rate rise. Earnings yield with the drop in the market has now pushed up to 3%. It was below 2.9, I think. Okay. So in order for this to start to reflect reality, what you need to do is for the market to go down so the yield can rise. Okay. And remember, stocks compete with bonds. Okay. And when bonds are not falling as they should, that's a problem because it puts pressure on on stocks. Because why am I going to go out and buy risky stocks when I can just own a bond and get 0.76%, right? So again, that's interesting that bonds are holding for now at least, and the market is dropping. Right. More information that this is going to be more bearish than we normally think of 3% pullbacks. And I like the Nasdaq only. Again, it's the market leader, so that's why I care. You see how it's behaving here? See it right up against the resistance area, correcting through time. Right. This doesn't look like it's going to bounce. Correct through time, yes. Expand the structure, yes. Bounce, no. That it would do something like this, no. Negative. I was looking at the one-day chart. Thanks. Anyway, okay. For oil, you mean? From June. So you're saying that this is round the top. Okay. Well, let me draw it better. You mean like this? It's not really. Around the top is like the VIX, which is a rounding bottom, but it doesn't matter. This is more of a rounding bottom, okay? Where you start getting those higher lows, right? So, where was I? Yeah, let's go back to the short-term analysis because that's what we care about right now. Is it going to bounce? Is it not going to bounce? And I don't think so. Okay. Despite the fact that we are at extremes of 2.8. Okay. This thing with the drawing tool is driving me crazy. All right. I think this is going to go along with everything else. It's going to break incredibly bearish and just keep going, and then we'll get some kind of a bounce. Yesterday, I had told my subscribers that I should call them friends. They've been here long enough, but anyway, that what will probably happen is that it's not going to bounce out of this structure. It's not going to do something like that. What it will probably do is continue on down much deeper than anybody thinks and then bounce. But not bounce to go to the top. That's not the kind of bounce I'm talking about. That it will correct from this structure from a much deeper level. Because when you look at the market overall and the internals, and you contrast that with the macroeconomic and fiscal and monetary support and so forth, it's not there. It's not there. So I would be a lot more interested in buying should it come much lower, form some kind of bullish structure right in here like this, okay, and then push through and then buy it. That to me would be correct. Now, buying the dips, I don't know. Vaccines are failing left, right, and center. There's no stimulus coming. Of course, the elections are going to have an impact, okay, even though we know Biden is going to win. Um, Biden is no fiscal hawk. Forget about what he did in the past. I heard somebody who's like, "Oh yeah, well, he's been a fiscal hawk, and look who he." Nonsense, nonsense. You're talking about a pandemic, okay? The states are fucking going bankrupt. Cities are going bankrupt. People are unemployed. It's going to get worse. We're going into the flu season. It's only October, right? We still got to get through November, December, January, February, March, right? It's a long ways to go. And you're telling me that Biden is going to be a fiscal hawk? What are you, fucking brain dead? You could put Ayn Rand in there as president. She'll be spending her ass off. That's just stupid. People try to sound very sophisticated and pseudo intellectuals, and let me tell you about what Biden is. You don't even know who fucking Biden was yesterday. Get the fuck out of here. I went back and did research on his voting. I give a fucking shit about his voting. I don't care about his voting. Okay? We're in a pandemic. They're going to print. They're going to call it stimulus, but it's not. Okay? It's not. It's not stimulus. All right. So expect a much deeper pullback followed by a bounce at some point. Zoom out a little bit. Okay. So I would be interested on the long side and not for a very long time. For now. Maybe things will get better. Somewhere down here. And I'll change the color. I'll make it purple. So you guys know. All right. Any questions? I'll make this purple down here as well. Even though it'll probably be it's going to be more of an area to something like this. Somewhere down here. I think this is better. I'll make this purple. How about that? This is my target area. I make fun of those people because it sounds like they're so precise in their analysis. I don't know if it's going to get there. I have no fucking clue. None. I'm just telling you where the likely area of potential reversal is. That's it. Sorry. All right. So everything is down between 2.3% and the FANGs are 3.3%. Transportation 2.65. And then you're seeing that the NASDAQ, not the small caps is only down 1.84. That doesn't even make sense to me, right? Their PE is like 150 or something. Let's extend this out. This is crap. So if you want to short anything, wait for any kind of a bounce, but short the small caps. If you're going to be a degenerate gambler. I entered the short yesterday, and it's not a big position because I still was hesitant to go balls deep, but I'm not touching it. Uh, I'm not selling out of it. I'm keeping it short, and that's the thing that this whole entire analysis of bare knuckle charting is about identifying risk rewards. That's it. Okay. The rewards are not always going to be fabulous. They're not going to be great, right? But when they are, that's when you're going to make your money for the year. Okay? That it's only going to be a couple times a year. It's not going to be every single day. It's not going to be when you have a day off and you have a hard on to go out and start trading and I'm going to make money today, right? It's not the way it works. It's not the way it works. So you identify your good risk rewards, you do your wave analysis, you do your structures, you identify where the good risk rewards are, you take it, okay, and then you let it go. You manage it. You manage it. You can't tell the market why it's going down. Can't do it. Cash. That's where money should be at this time. You want to reduce risk. Always reduce risks when the market is behaving in this manner. And that's again my argument that yes, you want to buy and hold over the course of time. Yes, if you don't understand markets, of course, if I go find somebody in downtown Philadelphia, who's does whatever for a living, what does he know about markets? Nothing, right? So in his case, of course, let him buy, hold, and that's it. But as I've said many times before, when people are talking about the markets, you should be reducing your risk. Okay? You should be reducing your risk. And here's what I mean by that. Do you want to... Oh, fuck. Let me do this again. Do you want to be involved in this? Do you think this is where you make money? When everybody's talking about a great financial crisis, double dip, whatever, right? No. This is when you want to be involved in the market. All in here. This is when you're involved in the market. This is when you make money. Nobody's talking about stocks. Nobody gives a shit about stocks. So you want to play smart, not you, but the experts out there, they want to play smart by telling you buy the dip when they never sold, so you can't buy, okay? And then say, oh, look, I'm right, right? And now they're going to ride it right back down. I don't. Again, you just reduce risk. I was out of the market for years, 2 years. I tried a little bit in 2008, got destroyed because I was buying the dip. But at the bottom, I was buying the dip. And then it was just so volatile. I was like, okay, I don't need this fucking stress in my life. Uh, so I stopped. I didn't understand what the market was doing. I didn't understand what was going on. So you could be sitting on that cash for 2 years, my friend. Best thing you will ever do in your life. Believe me. Greed kills. If it takes a 2022 for the market to do this, fuck me with this thing. If the market does this, and then you have to wait for that, then you wait for that. This is where you'll make your money. No one will be talking about the market here, my friend. Nobody. Nobody. Okay? So you go cash here, that's fine. And this is, we're talking about 401ks and these things, right? Long term buy and hold strategy and so forth. Everybody's been making fun of Buffett. Oh, Buffett is so stupid. Oh, Buffett, he didn't buy the dip. He's 150 billion on cash. Usually he's 20 billion. He's so dumb. He's so old. This guy Buffett, he's so overrated. Oh, Buffett. Yeah? Wait. Wait, my friend. Wait till the market is down. Everybody fucking hates it. You're not seeing any more of these commercials on YouTube. Hi, want to be a stock trader? Well, I've developed my strategy, right? All those idiots. Yeah. They're all coming out of the woodworks now. With my plan, you can make $6,000 per day. So put in $2,000 in the market and you can trade like me. Look at my Gulfstream. Come on. That is a clear signal of a top. That is a clear signal that the same thing happened with gold. Remember gold? You want to buy gold bullion from the National Treasury. It's got the Eiffel Tower. Oh, I'm sorry. It's got the Lady Liberty. Buy gold for freedom. Remember those guys? Every web page, every YouTube advertisement, everything was about gold. That was a top. It's the same thing with stocks now. It's a top. I'm telling you, you will see. My fiscal flows, they're showing that the market is going higher. It's got support. It's where the money goes in the pool. That's what we care about. Yeah, really? Can you please show us a chart of that correlation? Anybody bother to ask him that? No, of course not. Why would they ask for such a thing? Why would they ask? Well, you might hate having cash. I get it. But you'll hate losing it a lot more. Believe me. And you know what the worst part is going to be, Kevin? Is that when I'm starting to tell you be bullish and the market keeps going down, and I'll say buy more, buy more. And then if you put your full position on, leave it. I'm going to look crazy. I'm going to look crazy. Oh, Nick is wrong. Oh, his analysis doesn't work. Now, I've said this before. I am no veteran of trading bear markets. I'm not. I've consciously, as a trader, investor, whatever you want to call it, consciously, I've only seen one. Okay, I mean, sure, I saw 2000, 2003, whatever. I wasn't conscious. I was a sperm, right? So consciously, 2008 was the first one that I paid attention to. Got my ass kicked, got out, had enough sense to get out and be like, I don't know. Waited 2 years, and then when things started to look normal, okay, now you start to buy and hold, right? I was here. Change the color again. Somewhere in here. And then we had this stupid downgrade of the U.S. I remember I was in Greece, right? And I'm like, what? Yeah, we're downgrading the U.S. How the fuck can you downgrade the U.S.? What? They can't meet their obligations? They can't print dollars? It was so funny. And I remember back then when I had my YouTube channel, I was like, this is stupid. This is ridiculous. It doesn't even fucking make sense. Do they know who they're talking about? Right? And now we're printing 25% to GDP. And where's the downgrade now? Oh, there's no downgrade now. No, everything's fine. The fuck? So you see a lot of these things are politically driven. A lot of these things are politically driven. All right. So let's do the analysis from volume. Right. So we'll go back 3 days. Okay. And the point of control is all the way up here at 11,570 something. And we are clearly way, way, way below outside of the 70% of all trades. We are seeing a very big spike right at the support area right now as we speak. And when you look at the chart, remember, this only analyzes the chart that's visible. When you look at the chart that is visible, suddenly, right at support, magically, okay, because some people say, well, technical analysis doesn't work. Really? It doesn't work? So why is everybody buying exactly at the support area of this channel? Why is the volume spiking? Why did price drop to this support area and suddenly volume comes in, right? So don't listen to these people, okay? I can take a finger, point to it, and show it to you, all right? They can only give you words, unsubstantiated uh, words. That's it. All right. So on a 3-day look back, point of control is all the way up here. We're finding some support at the trend line. Now let's bring it to yesterday. Where is it? Somewhere in here. Okay. We had this structure. We had a double top. We were looking for this to break. It didn't do it. We got that news of Microsoft in after hours. So then we got that pop, right? And then it failed. Went into a flag in the overnight session, okay, and then failed this morning. Makes perfect sense, okay? Point of control failed right at um, 2:30 in the morning, okay, 2:50. So look at this huge gap in here, right? This void. Nobody even attempted to buy it. They just let price fall. All right. So let's go to this morning. I'll go down to a minute chart. Oh, come on. All right. So here we are. Um, what does this look like, right? A P upside down. Okay. Remember, when you see a P going up, right, that's a short covering rally. Okay. This is puking. It's the opposite. The bulls are puking it up. All right. Right from the open. Bam. What's price doing? Going straight down. Bam. Right? Yeah. It's not going to hold. It's forget it. Now it's for okay. So the way I look at it right now, what is it trying to do? Well, it's trying to form the next bell curve. Okay, so this is going to be the point of control. Price will come back here at some point. So what it wants to do now is to make the bell curve proper. It's going to do something like this. Okay, and then price is going to explore it and then come back up. So somewhere down here, I would be a lot more interested in buying it, um, given the right structure, right? Given the right setup, not just willy-nilly. I can't even speak. Okay, so let's take a look at the S&P 500. Okay, we identified that inverse head and shoulders here into the close about 3 days ago, if you remember. It broke out. Okay, it broke out, came up, went down into this flag formation, which is bearish, right at the 63-day moving average, which is a quarterly average, and also the point of control. It was trading below, and then it broke. Well, once it broke, it was, game over, right? You see another bear flag, right? And then what happened? The drop. Okay, because that's how markets move, to the upside and to the downside. You'll get the push up, you'll get the bear flag, push up, get the bear flag, push up, right? That's the way markets move. It's the same thing to the downside. You get the drop, you'll get the consolidation, drop, consolidation, drop, consolidation, right? And then you get the structure, right? And then it starts going to the upside, and then that fails, and then, it's just the same thing over and over and over and over and over and over and over again. And that's why bare knuckle charting works. All right. So again, point of control for now is all the way up here. You can forget about it. Uh, the the buying right now in the S&P 500 in here is not the same as it is in the Nasdaq, right? So let's bring that into today. There it is. Okay. So for today, the point of control is down here, but it's not it's not it's not doing one of these jobs, right? Um, it's not spiky enough. It's very dull, very dull. Maybe through time it'll build up, but it's not. It's not like the Nasdaq. And here's my other argument with the, and this is a longer term picture, obviously, okay. But clearly, you can see how volume just fell off a cliff after it went above the point of control. That's a big telltale sign, right? That there's not a whole lot of interest. Yeah, price is going up, but it's not backed by strong volume. So, you know, where's the likely area that the market ultimately can correct to? And the fangs to the point of control, which is somewhere around 35.60-ish. All right. And how much of a drop would that be? 36%. 36%. Nothing to sneeze at. All right. All right, guys. I'll be back later into the close, lunchtime. It depends what time it is, but I'll come back around maybe 2. It depends. We'll see. All right. But definitely I'll be back between 2 and 3. All right, guys. Take care. Bye bye.